Hey guys, again, welcome. So today we're going to cover an interesting stock from the cigarette space. Now, in cigarette, we all know ITC is there, but today it's not ITC, but another competitor, which is Godfrey Phillips. Now, this industry actually has, VST, ITC, the few major players in this sector, and let's see how fundamentally Godfrey Phillips is. Now, from a fundamental perspective, the stock is just trading at a 14 PE, and it has a market cap of around 5,300 crores, and ROC is pretty decent, around 19% and 15.8%. It has no debt, so anything above 2, 3, you should be really wary about. You should be cautious about those kind of companies because they have high debt. Anything below 1 is kind of okay. It's not really bad, but anything around zero point 0.5 and less is really commendable. Um, so these companies are kind of cash generating companies, so you don't have to really worry about them. It has pretty good interest coverage, so that's not a problem at all. Now, from a fundamental perspective, what this company does is, as I said, it manufactures cigarette brands, like all these famous brands. But this is the major point that I wanted to stress on, that it has an exclusive agreement with Philip Morris, and it also is the sole manufacturer and distributor of the Marlboro brand in India, right? And also, if you see, there was a significant, not a significant, but a 1% increase in the market share for Godfrey Phillips, right? So otherwise, from a sales perspective, the company has just, managed to keep its sales steady over the last many years, right? There's hardly any increase, and even profits, you see, they have come, yeah, the margins have increased significantly in the last 2 years. If you see, that's why their profits have jumped from, even though sales were constant, the profits have jumped significantly. That's why you see even the CAGR reflecting a 33% growth in profits. Now, that's pretty good for this company. And actually, if you see from a technical perspective, in the last 3, 4 years, the company has not done really well. But from earnings perspective, the company has done really well. Now, quickly jumping into the technical analysis. Now, as I mentioned, since 2015, if you see here, the stock has been going sideways, right? But in the last 3 years, we have seen that the company has actually increased its earnings. And that's one of the reasons the company's PE is actually trading low, around 19. Um, Probably it deserves a high, PE ratio. Just going back to the PE ratio, it's around 14, right? So even if it's trading at a 19 PE, I see some upside for the stock. And from a technical perspective, the stock has been in a perfect textbook parallel channel uptrend since 2000, right? So since 2000, it's just been going around that trend line higher and higher and higher. And now my expectation is that it's probably heading higher again, right? Now, from this lows, if you see, I'm just going to show you, sorry, not this one, but here. Now, from this lows, if you see, the stock actually went up almost 4 times, right? Now, I'm not expecting the same kind of returns over here, but probably we're heading to at least, 3,000 odd levels in the next many years, slowly and steadily, just like this, right? We might consolidate around the middle channel again, go higher. Now, another point is the test of this channel is complete. Now, after this COVID crash, it just went sideways. It hardly had any movement. And this month, we are seeing some nice activity picking up on the stock, and it's going higher now. So, yes, it's a very good time to buy the stock. The stop loss is lows around 840, and I'm see targets of at least, this all-time high again around 1,500, and then probably we head more higher from there. And also, if we cross this 1,500, we are breaking out from a rectangle pattern. Now, this rectangle is a 6 years, consolidation breakout around 1,500. So if we manage to cross 1,500, then probably we're heading towards 3,000 odd levels. So this is from a risk reward perspective, this company is an excellent company to be invested right now. So I hope you enjoyed this view. Again, thank you very much.